You're scared you're not going to be able to make payroll. And now somebody is calling your business with what sounds like a perfect solution: cash in your bank account tomorrow. All you have to do is promise a percentage of your revenue to pay it back. There's no paperwork, it's fast, and it feels like it's going to solve all your problems. This is actually the fastest way I know to turn a tough situation into a complete disaster. And as you can tell from the title, I'm talking about MCA loans. By the way, my name is Abby Johnson with Matterhorn Business Development. I help business owners increase their profit, regain their time, and get out of the day-to-day of the business. And I am seeing more and more clients come in with these predatory MCA loans on their balance sheets, and it breaks my heart. That's why I want to talk to you about this today, because spoiler alert, I hate these loans. I think they're predatory, and most of the time the terms I think should be made illegal. These loans can have 50% interest, which is just insane. But let's rewind and talk about what an MCA loan actually is. MCA stands for Merchant Cash Advance. Merchant meaning your merchant account where you are processing your revenue. Cash advance meaning you are getting an advance on cash or funds that you expect to have in the future. So this isn't really a loan. You are getting an advance on revenue from the future. That's why this money is so easy to get, is because the bank is just looking at your revenue. They don't typically look at your credit score or anything like that, and they lock you into these contracts with a percentage of your revenue to pay the loan back. This is also why you don't just have a flat fixed payment month to month like you would with a loan, but the money is actually being taken out of your account every day or every week typically, because they are drawing on the money as it comes in. Now, if you already have an MCA, I know you know this, but I also want to educate those looking into this on what it really is and what you're really signing up for. As I mentioned, they also typically have astronomical interest rates. I have a client right now who took out an MCA loan for $25,000, and she's going to end up spending $40,000 when it's all said and done. This is what no one wants to tell you when they're signing you up for an MCA, is you got into this position for a reason, and this MCA is not going to solve that original reason. Yes, maybe it was a one-time event. Maybe you completed a big job and now the customer is taking longer to pay you, or maybe you had a piece of equipment breakdown or some sort of disaster. But the thing is you can prepare yourself in advance for these disasters. The other thing I see is simply someone just can't make payroll for the week. They might not know why they can't make payroll, but all they know is this is fast money to fix that immediate problem. But if you weren't able to cover emergency expenses or cover payroll, then something is wrong with your cash flow system and your profit. So what we really need to do is fix your profit and your cash flow management, not just keep taking loans to get by. If you weren't 17% profitable to start with, and now this MCA is going to be taking 17% of your revenue, that's not going to work. They make it sound so easy of, oh, we'll just take a percentage of your revenue as it comes in. It feels easy, but your business probably can't actually afford those payments. So what ends up happening is that daily or weekly draft comes out of your account, whether you've had a good week or a bad week. It comes out before you've run payroll, and certainly before you've paid yourself. The other part of this trap that I see is then business owners get so tight on their cash that they end up taking a second MCA to cover the first MCA. And then it's a vicious cycle they feel like they can't get out of. Look, I am actively doing financial assessments on businesses all the time. I have done this for dozens of businesses. The pattern I'm seeing, especially with those with MCAs, is that when I look at how much was deposited into their accounts for the year, so how many dollars did they receive in loans, and then I compare that to the loan payments, how much did they pay out in that year, it comes out to be almost even. So let's say they received $35,000 in 12 months, they ended up paying $35,000 in principal payments, not to mention the interest on top of that. So they got loans for $35,000 because the business didn't have it, but they ended up figuring out how to operate without that $35,000 in terms of the percentage of revenue being taken off. They ended up paying back that $35,000 in the year. So what that shows me is that the business actually could afford that $35,000. This business actually is profitable and has the potential to be more profitable because it was forced to be. So why don't we implement a cash management system that sets you up that way from the start, so you don't need the MCA MCA to begin with. Really quick, if you got into this MCA mess because you didn't feel like you understood where your money was actually going, you know money's coming in, you're not really sure where it's going out, and especially if you do have those MCA payments happening, I'm sure it's even more confusing. That's exactly why we created our free download of a cash map. This cash map is a simple template to fill out to understand the buckets in your business where money is going. This is your first step on the way out of ever needing loans again. So click the link below and download your free cash map today. So the real fix to your tight cash flow is not getting more loans or getting more MCAs. It's fixing your profitability and having a real cash management system in place so that you continue to stay profitable. This is why I'm a certified Profit First professional. I've been certified since 2019, so I've been doing this for a while. And this is by far the best cash management system out there for business owners. This is a simple way to manage your money and have complete clarity on what you can actually spend without needing an accounting degree. I even have clients who do have accounting degrees and they still love using Profit First because it's even clearer than opening up QuickBooks. I have a whole playlist on Profit First that you can deep dive into, but essentially the idea here is just what the name says, Profit First. Instead of taking your sales minus your expenses and then crossing your fingers hoping for profit at the end of the day, you're going to take sales, take out your profit first, and then run the business on what's left over. This doesn't mean don't pay your bills, don't pay your payroll, or anything like that. It just means you're now going to be more innovative with what you do have to spend. So let's say you get a big check-in for $20,000. Well, it's really easy to turn around and throw that $20,000 at something else, especially if you're in debt. What I see is people panic and they throw it at the debt because they just want to pay it down faster. But then they're still stuck at being really tight on cash because they went and panic spent the money on their debt payments that were extra debt payments. So with Profit First in place, you'll be able to guarantee your pay as the owner, make sure that you and your personal bills are taken care of, and then you're going to see what's left at the end of the day and what you can actually afford to spend in the business. You're going to get more innovative with your spending, and you're going to have more clarity over your spending and what is actually in your business. Now you're going to have true knowledge of the finances in your business. Now, I know it's all well and good and easy for me to say, hey, just implement Profit First and all of your problems are solved. But what do you do if you've already taken an MCA loan or you are at that point where you feel like you need one and that is your only option? Now, the first thing I want you to do if you already have the MCA is do not take another MCA to cover that one. We do not want to stack these MCAs. You're going to just get stuck in that vicious cycle. The second thing I want you to do is get the exact numbers in front of you. What is your balance? What's the payoff if you were going to pay it off all at once? How many payments do you have left, right? Project out how long you have these draws coming from your account. This will tell you how long you need to hang on and hang in there, because that's really part of this is you're going to have to hang in there and be creative while you're getting these drafts taken from your account. Third, and I want you to be very careful here, but look into the possibility of getting some sort of traditional loan or SBA loan to buy out the MCA. Now, I know because I have researched this topic and then I get targeted with a bunch of MCA ads because they think I have an MCA. There are a lot of predatory companies out there, and I have to laugh a little bit because it's so ridiculous where I think the MCAs themselves are predatory and skeezy, and then you've got these other skeezy companies who are trying to jump onto people who are already in a vulnerable situation, which I really hate. So there are a ton of places, if you Google MCA loan help or MCA relief or whatever, there are a ton of agencies who promote that they do this. I don't know which ones are reputable. So you either have to really do your research ahead of time, read the reviews, be aware that some of these use the tactic of more of a debt relief process where you default on the MCA and then they settle the balance so they negotiate down the balance for you, I would not go with that option personally. What you need is a more traditional lending vehicle. So there are companies out there who you can either go directly to your bank, or you can go to a company that can reach out to multiple banks to see which kind of lending product will be right for you and what they can get you approved for. You probably would need a credit score in the 600, 700 is even better in order to do this. If you have a trustworthy person who has a great credit score and maybe could co-sign with you, then that is an option for you as well. And if in that process you are offered to take more than you need, so let's say you need $100,000 and you get approved for $150 and you're like, oh, it's free money. That's a trap a lot of people fall into. It's not free money. There's interest, there are payments, there's a commitment made to that money, usually also a personal guarantee. So do not take more than you need if you are approved for more than you need. And then fourth, I want you to implement a cash management system now. Obviously, I'm a little biased with Profit First, but that's because I've seen so much success with my clients, even while they're paying off MCAs. You can start off slow with Profit First and start putting that management into place now so that you never need to have an MCA ever again. This system can help you pay off the MCA faster if you want to try to throw some extra payments at it, but it also will get you through whatever that time period is you have left. If you have 3 months of payments left, you're going to be able to get through that period easier. And lastly, what I want to say about this is if you have an MCA or you are at the point of thinking you need to take one, right now you need to be in hustle mode. You need to hustle more than you have ever hustled before. You need to focus on making money. I don't care what else is happening in your business. That has to be a top priority right now. I'm not saying that this is an easy solution, but it's going to be better than taking an MCA. I can guarantee you that. If you don't have full visibility of where your cash is going every month, we really need to start there. Before you take any loan or make any decision, you need to understand what money is coming in, what money is going out, what your actual profitability is right now. So go ahead and download our free cash map at the link below. This is going to give you clarity on where you stand right now and where the ideal is for your business. And if you're in this position, I highly recommend you check out my video here on the 10% pricing rule. I'll see you in our next video.